parliamentary elections have a huge impact on markets in the short term. In 2004, the disappointment of the NDA not returning to power saw a 125-point intraday fall in the Nifty. At that time, that worked out to an 8% swing. In 2009, on the day after counting, when markets started trading, the Nifty jumped 20%. Circuit filters kicked in, of course. The 2014 election rally actually started all the way from September of 2013, got boosted in December when the BJP won several state elections. The Nifty actually moved from around 5,300 in September 2013 when Narendra Modi took charge as the BJP chief and went on to 7,500 on the day of counting to 9,000 in the next 8 months. In short, traders and investors need to know the impact of elections on markets.
And to do just that with us over the next half hour, we have a panel of experts. Nilesh Shah, MD and CEO of Envision Capital, Saurabh Mukherjee, the founder of Marcellus Investments, and Ashwini Agrawal, co-founder and partner at Ashmore Investments. Gentlemen, thank you very much for joining us. And I know that maybe a lot of our guests will feel that it's only a one-day phenomena, but let's face it, it's the one day that we all look out for over a span of a good 5 years.
No, actually, I want to start over there because the frequent refrain is that, markets will ultimately follow earnings. So let me start on a somber note. Irrespective of who comes to power, Nilesh, there have been competitive promises of income transfers. So there is going to be a fiscal issue. There is going to be probably consumption-related stocks that will get a boost. I don't know. But generally, irrespective of who comes to power, do you think that the second half could be a little worrisome because of all these big fiscal promises?
Well, maybe on the fiscal front, they could be worrisome. And look at really the posturing of the statements by the two national parties. And clearly, I think if you look at the finance minister, he said that if we come back to power, fiscal prudence will be the top priority. Whereas clearly, of course, the Congress has gone ahead and talked about Nyay and obviously given the way they've implemented the loan waiver in the three states, it's quite possible that they would basically, in a way, fast roll the implementation of that. So my sense is that if we probably have a BJP-led government which comes to power, maybe the concerns on fiscal front would be less. If it is a Congress-led government which comes to power, then maybe the concerns on the fiscal front could be front-loaded till we see really the details of how the entire implementation happens. Okay.
No, would you agree with that, Saurabh? For the simple reason that the math for FY19 also is not quite adding up on the fiscal front. The expectation of tax revenue growth was 19.5%. It's probably a lakh or lakh and a half less than the 14.84 lakh crore that was expected as only net central tax revenues. So on that, some expectations have been made in the interim budget. Are we sure that we are not going to have fiscal overreach, even if it's a BJP government?
What's very interesting about Indian politics, Lata, is that we have a debate in our polity over the last 10, 20 years, going all the way back to 1991, where there's hardly any divergence between the two main political camps on matters of economic import. I mean, on other matters, there's obviously different strong ideological views, but on economics, the two main political factions in our country espouse much the same sort of views. And in a way, echoing your concerns, what we have seen over the last decade is both sides of the political divide agree on the need for handouts to get votes, whether you call them loan waivers, whether you call them PM Kisan, whether you call them Nyay, etc., is matter of sort of nomenclature. But broadly, the thrust of Indian politics is give money, get votes. So I don't see that paradigm changing. And in that regard, the other interesting trend in Indian politics is running into the budget, running into the election, generous budgets, spending-oriented budgets to give sops to the poor. Typically, after elections, the first two budgets tend to be contractionary. And I think that pattern should hold again this time. After elections, I expect the first budget in July, regardless of who wins, to be a fairly tight budget.
Okay. Ashwini, you want to comment just on that? Are we headed for some tightness in the second half?
I was listening to an interview by Mr. Chidambaram, and he also said that the Congress does not wish to exceed the 3% fiscal deficit. So obviously, while they are making tall promises at this point in time, I think the rollout, as Saurabh said, of actual spending might be a little bit less than what is being promised promised at this point, because we must also remember that there are two more factors that the government of the day will have to contend with. One is the monetary policy agreement with the Reserve Bank of India, and if the fiscal deficit tends to be a lot larger than what the RBI is agreeable to, you could see a rise in rates. And second is a potential failure of the monsoons with the rising probability of the El Nino effect. So if you put these two things together, I think the next government will be a lot less irresponsible than what we feel, at least if it's the two national parties making the decision.
So I think that's the hope on which much of this rally is also based, that at some point fiscal prudence will really prevail. I want to come back to what seems to be emerging as a focal point in the election narrative this time around, and that's jobs. I mean, the big debate around whether the numbers that have been thrown out, how believable they are, of course, the NSSO and the debate around that. And even in the Congress manifesto, the promise, government jobs, state and central, and even the promise to incentivize the private sector if there is more job creation. They're talking about making it mandatory, for instance, to have apprentices if a company has more than 100 employees. So, Nilesh, on that, how would you rate the underlying economic fundamentals where we are, and whether some of these programs that are being spoken of, whether they will bear fruit?
Well, that will really depend upon the kind of political courage that the next government really gathers to undertake huge reforms. The reality is that, growth in jobs has been sluggish or relatively sluggish, primarily because, of course, a lot of industrial activity, manufacturing activity has not taken off. And that probably stems from the fact that a lot of land and labor-related reforms have at least the current government has found it difficult to implement politically. And I think clearly it depends upon whether the next government gathers the courage to really go ahead and implement those reforms. And I think if you look at past evidence, be it 1991, in times of Narasimha Rao as the Prime Minister, or later on during the period of 2000, around the times of Prime Minister Bajpayee, clearly big reforms happen only when India faced a crisis. Okay, it's only when that's the time you really reform. And I think the starting point for the next government will have to be that, yes, there is a challenge. And therefore we need to do what it requires to really kickstart the manufacturing and the industrial side of the economy. That's only when we have massive job creation. If not, otherwise, essentially this whole environment of handouts and give-outs will have to continue.
Okay, you just want to comment on this, and that also ties in with the bigger question. If there is a problem, as Nilesh is alluding to, clearly the market has completely moved on. And how? Beyond what's happening beneath the Sensex and the Nifty, what's happening to the broader economy? So
I'm not so sure the market's moved on that much, Surabhi, because if you take the Nifty's 5 or 10-year compounding, it doesn't tell a particularly pretty story. And if you take small and mid caps and the broader BSE 500's compounding, that also doesn't suggest a really revving dynamic economy. I agree with Nilesh. Change and reform comes in the wake of crises in our country, and the most likely crises, if you were to look over the next 2 years, and this is regardless of who wins the election, the most likely crisis is likely to be the financial system. We still have a broken banking system for all intents and purposes. It's not obvious that any political party has put forward a solution as to how do you recapitalize the PSU banks. I don't think we've found a viable way to finance our housing finance companies. Borrowing money 3 months in the CP market and giving 20-year home loans is not the way you're going to build houses in India. So to the extent the real economy crisis could be a while coming, joblessness is growing, but hey, will that turn into an economic crisis? I don't know. But here and now in this city, in Mumbai, the most likely crisis we could face is a banking system problem, and that could potentially trigger a bout of reforms in banking, which in turn could take the economy in a new direction.
Well, okay, I don't know. I don't think we should be talking crises at this point. We are not in 1991, which was, there was an IMF money to be paid. Let's talk brass tacks. I mean, how will you prepare for elections 2019, Ashwini? Will you load up on stocks? Will you load down on stocks?
Interesting question, Lata. So you read out some statistics relating to 2004 and 2009 election results and how the market behaved on the day of the results. And 2014, pretty much nothing happened. So right now, if you think about it, the consensus view seems to be that the BJP will return to power. Could be with slightly fewer seats than what they have today, 220, 230, 240. Those are the kind of numbers that are doing the rounds. And if there's a massive surprise on that element, on that number, then you could see a big movement in the market. Now, the question is that we are still about 7 weeks ahead of that date. And how the market does in those 7 weeks is really critical to how the market will behave. So if indeed the BJP is to come back with those kind of seats, that's priced in. If there's going to be a big surprise, either we have a Congress-led government or we have a third front hodgepodge being supported on the outside by the Congress, that's definitely not priced in. And if that outcome becomes apparent either ahead of the elections, we should expect a significant correction, or if it happens on the day of elections, contrary to the expectations in the build-up to the results, then we might have a surprise. So as of now, we are really thinking that let's go along with the consensus because we really don't know any better. There are different...
While you are going on with the consensus, what sectors are you buying?
So as of now, what we are focusing on is the mid and small caps, Lata, because the way I think about it is that if you look at the mid and small cap indices between January 2018 and February 2019, they have underperformed the frontline indices by a factor of 41%. This is the biggest underperformance of small caps that we have seen in the entire history of these indices being available to us. Most people don't realize this. Valuations are attractive. And I think the big two shocks that the economy faced over the last 5 years, which is demonetization, which is GST, that I think is now behind us. So normalization is taking place. Some corporate investment is taking place. While Saurabh obviously is pointing out to the need for longer-term reforms on the banking side, in the short run, I think there's more money to be lent because banks are feeling a lot better looking into the future than they have in the past, unless, of course, we have big blow-up in the financial system. So I think there's a lot of opportunity in the mid and small cap space. But is it, completely bullish outlook and saying that, we are off to the races? I don't know, and I don't think so, because the frontline indices are expensive. A lot of the stocks in the large cap space are expensive. So one has to be very, very selective at this point.
I just have to take a break for that. But you've whetted our appetite. Ashwini will go long on small and mid caps.
That's right.
And sort of made that interesting point, slightly pessimistic, may I add, on banking. So Nilesh, I want you to come in because this rally has been based on this fundamental pillar of the market, including corporate banks, including PSU banks. So is there a risk to this rally, and should one not get too carried away?
Well, I don't think there's a risk to basically financials per se. Of course, clearly, of course, if something moves up a lot more in a very short time frame, it can, of course, correct. And the reality is that basically financials now have a very disproportionate weight in the frontline indices. So clearly, of course, if there is a need for a correction, or if there is a correction, I think it will again be led by financials. But clearly the structural opportunity in financials, I still think, is a long way to go. And irrespective of what really, and in the last, even if you look at the last 5, 10, 15 years, there have been a lot of challenges on the macro front, economic front. But clearly the well-run private sector banks really have never been challenged in any significant kind of manner.
Which is why this question was more about the PSUs, because a lot of people seem to be calling a bottom over there. PSUs as well as more corporate-facing private banks.
Yeah, so I think in the case of PSUs, clearly I would probably say the worst is behind, especially in terms of the asset quality. I don't think there's going to be now a very different level of challenges in terms of the asset quality. The challenge for PSU banks typically is that we've seen tactically when, they're very vulnerable to interest rate movements. So clearly if, for example, the next government comes in and there are challenges on the fiscal front, of course, yields will tend to move up, and that itself would become a cause for correction in PSU banking stock. The other challenge for PSU banks is that structurally nothing much has changed, apart from, of course, IBC, but a lot of the softer issues related to management of PSUs and the composition of the board of directors and all of that, and of course that NAIC committee report which we heard about 5 years back, all of that still essentially is still work in progress, or maybe is yet to start in any significant manner. So barring IBC, nothing material has really happened. So I think PSU banks still are a very big avoid. I mean, unless, of course, you are a trader, you want to really catch another 5, 10, 15% moves, that's another thing. But clearly, I don't yet see a structural opportunity in PSU banks unless big bang reforms happen with respect to PSU banks.
No, I think this government made it very clear they are not going to privatize. Both Mr. Jaitley and Piyush Goyal said that the political consensus is not for privatizing, and which means a large part of NAIC committee is not on the cards.
But, on that front, you never know. I mean, there can always be, you could be in for a store of surprise. You really never know next government. Like, for example, nobody
You will bet on privatizing?
No, I'm not saying, I'm saying we should. But I'm just saying is when you see those signs, then that's the time you probably need to change your view. I'm only saying this. Right now, I agree that we really don't see any signs of any significant reforms or privatization of PSU banks. But who knows? I mean, the next government comes in and says that, look, let this be a focus area,
I could carry on this debate forever. I had great hopes that at least IDBI would be privatized. We didn't see signs, so...
Yeah, absolutely.
Okay, no, my short point is what I asked Ashwini as well. If the base case is that BJP comes into power with maybe a smaller majority, and if that is the opinion, that is the view that you're getting closer to May 23rd, are you going to tank up more?
No, look, I think one has to kind of keep investing when you see the opportunity on a standalone bottom-up basis. I really don't think you can take any specific decision based on what the election outcome is going to be, because in the last 20 or 25 years, whatever 5 general elections we've had, there's only one election outcome which has been in line of a consensus. The other 4 or 5 have not been in line with consensus. Every time the markets have been surprised, or there has been whatever a shock depending upon which side you are, okay, be it 2009 or 2004 or maybe even 91 or 96 and all of them, or 98, all of
Brexit
them.
Or Trump, yes. The polls did not.
So all of that. So that's one. 2 is depending upon what's the kind of government and what's the economic agenda it adopts. Keep in mind that we've had coalition governments on many occasions in the last 25 years. Okay, and those coalition governments have come in with a very positive economic agenda where a lot of reforms happened, whether it was the government of H.D. Devagowda or whether it was 91 or it was 98 or 99. A lot of reforms happened in that period. In fact, less reforms happened on the economic front when you essentially had a government with a stronger majority or a stronger mandate. Okay, so who knows? And who knows that this time around, let's assume the existing government gets a second term and they might kind of adopt a very different view that it's now time to turbocharge the economy and look at things in a very, very different manner. So I probably think that I wouldn't want to do anything keeping in mind the election outcome. Let the election outcome happen and let's see what's the economic agenda of the government.
Which is where I bring in the next question. Irrespective of who comes to power, is there any case to believe that the second half of this year could belong to cyclicals? Under-owned part of the market relatively compared to consumption. Is there a cyclical or infrastructure move waiting to happen in the second half post-election? Saurabh?
So I agree with Nilesh that, and Ashwini that the identity of who will win the election, at least people like us who are investors don't really know. But that being said, I think economic policy has become fairly predictable. Both in India and the world outside. And economic policy largely hinges around giving sops to the poor, taxing people like us, and hoping the best that consumption will hold the economy together. That's been the paradigm the last 10 years, the world over. It's not as if India is an outlier in that regard. That actually makes it relatively easy to figure out which pockets of the economy will have a really healthy run over the next 12 months. So private banks, as Nilesh said, as the PSUs stay capital starved and the NBFCs struggle with the cost of money in the wholesale market, private sector banks in our country are really, really well placed for a couple of years. Secondly, consumption. Whichever party you look at, state government, central government, give money to the poor is a theme. Small ticket consumption should hold up, has held up last 12 months, should hold up in the next 12 months. And the only place where you really have to sort of make a little bit of a call, not a very big macro call, is the currency. At 69, the rupee looks overvalued. Our export growth is close to zero. Our current account deficit is punching towards 3%. A depreciation in the rupee, a devaluation in the rupee towards 75 looks to be warranted.
Crude is only 60.
So crude you don't have to predict. Even if you don't predict crude, if you have CAD at 2.5 with crude at 60, I think the writing is on the wall for the rupee. If that's the case, exporters should have a decent run over the next 12 months. IT is already having a party. So the only counter consensus call, to make a little bit of a brave call, is pharma. Will pharma recover? My hunch is pharma will recover. It's long overdue recovery. Recent results suggested our pharma stocks as US demand numbers are picking up. So private sector banks, consumption, IT, pharma, no great sort of surprises there. Buy them. They've made money in the past. They'll make money in the future. You carry on making money. Leave the politicians to do their power plays amongst themselves. You make good money in your portfolio.
You agree?
So this is classic coffee can investing, Saurabh. So obviously it works.
But he still hasn't answered my question. My question was on the not easy bit, on cyclical revival, on infrastructure.
So So my sense is that I'm positive about capex, industrial capex led by the private sector. So machinery makers, select pockets where you can find an idea, somebody doing, equipment that helps the environment. I think the government is getting very, very serious about damage to the environment. And I think a lot of the manufacturing sector will have to up their game. I also think that capacity utilization is running higher. If you look at the RBI credit reports for the last, 3 or 4 of them, they consistently are pointing to higher capacity utilization, and it's now running above trend. So new capacity will definitely be there. Corporate balance sheets are significantly deleveraged, so we can expect some pickup here. Lastly, what my sense is that one has to be a little bit watchful about the government's investment in railways and roadways. For that, we will need to see a continuity of the current policy, and that one hopes will be there because it's required. But of course, as you had mentioned at the start of the program, if there are fiscal constraints, and if the new government is made up of different people with different outlook on these two sectors, then we might see a pullback here. So we have to watch a little bit as to what happens. So cyclical recovery in domestic industrial cyclicals, yes. Globally, the economy is weak. I mean, nothing's much happening globally. You look at the data out of the US. US has really not looking to be an exciting place. Europe is kind of trundling along. China stabilized, but again, much slower than what it has been over the last decade. So metals or oil or any of these global commodities, I don't really see a very, very strong outlook for. That's how I would play it.
Okay, now we have the rapid fire format for the last 2 minutes. And the question paper is getting leaked. Where do you see the Nifty if the BJP comes back with maybe a lesser majority? First question. Second question, what if it is a non-BJP government? And third, what will be one sector that you will pick up for the rest of the year? Okay, so Nifty, if BJP comes back, the best performance for 2019?
Well, I think then I think you could probably see a 5 to 10% upside in the Nifty.
Saurabh?
If BJP with absolute majority, if BJP gets an absolute majority, Nifty at 14,000. Okay.
Ashwini?
If BJP comes back with a slightly softer majority than they have right now, I think the Nifty stays where it is. But I expect to see a significant performance from mid and small cap stocks.
Okay. So 10% equity returns?
10% equity returns, yes.
Okay, so let's talk about the other scenario. No BJP majority, hung parliament, khichdi, then the Nifty.
Well, then we could break 10,000 as well.
Okay. Saurabh?
My long-awaited forecast of 9,500 comes into play.
Ashwini?
I think there's pain, obviously, whether it's 10% or 15%, 20% is anybody's guess. There's a lot of liquidity globally that's sloshing around. So at some level, the liquidity will come back in. And domestic equity exposure is also not that large.
So not 4 figures?
So I don't know. I can't forecast, but yes, it'll be terrible for the markets.
Okay, again, let's go back to the consensus. One sector you're going to bet on at this point in time, before elections?
Well, I think insurance. I think that's clearly our favorite. I mean, elections or maybe even for the next 5 years, 10 years. I think insurance as a pack looks fantastic, irrespective of who comes to power.
Okay. Saurabh, your call?
Pharma. Currency and pharma.
Okay. And Ashwini?
Okay, out of consensus, cement. I think that's one area where the pricing is so weak that no new capacity can be brought in, and I expect significant improvement there. So it's a small sector, but I think a lot of money to be made.
Okay, let me add a surprise. Last quick rapid fire. If you were to be advisor to the next Prime Minister, the one most important priority for whoever gets elected. Nilesh?
I think PSU reform. Across the board, PSU reforms of government departments, I think across the board. Because just look at it, Surbhi. You've got an inflation rate of 2.5%, but we still have the 10-year at 7.5%. Why? Because there are other government bodies who are out there going out there and borrowing at much higher rates.
It's rapid fire. PSU reform, 10 seconds.
Labour market reform and scrap the minimum wage.
Okay.
Ashwini? Administrative reform. We have far too many people in the government.
Okay. Well, many will say that it is limited government. But okay, I'm more happy with the key takeaways we have. If it is the consensus call of a BJP-led government, at least 10% increase in the key index Nifty, 14,000 is the call. But mid and small caps is what Ashwini will bet on. If it is not, then even a 4-figure, 9,500 possible, but 10,000 is what our experts fear. Key stocks that they will go with, private banks, insurance, the pharma and currency plays, and for cement is Ashwini's call. So that's a bag of ideas from our experts. Thank you very much, Nilesh, Saurabh and Ashwini, for joining us in this pre-election special.
With that, it's a wrap. Thank you for watching. And of course, do stay tuned. CNBC-TV18 is going to be your election headquarters as well over the next couple of weeks. More such ideas and themes coming your way.